Now, like we talked about earlier, one of the key factors that affects how much money or how much profits you make from trading is your trading account balance. So taking your personal savings, putting it into a Forex trading account and trying to trade that to make some money can be a very tedious and process. And it also needs some sort of experience. So if you're a beginner, you're yet to perfect your skills, you're yet to figure out your risk appetite and also just control the emotional aspect of trading, which are all important factors. So one of the ways you can do it without putting in some of your personal capital is leveraging something we call a prop firm. So this can help you accelerate your growth and also your profits. So what is a prop firm? A proprietary trading firm is a financial institution that trades with its own capital to generate profits directly from the market. So opportunity for skilled traders is provided here, where individual traders can demonstrate a proven skill set and adhere to strict risk management protocols, can gain access to significant starting capital from these firms. So how this works is you buy an evaluation account. Some are like $36 for maybe a 5,000 account, and can go all the way up to maybe $200 or $300 for a 400 or 200K account. And you can get these accounts given to you once you pay the fee. You do 2 evaluations, phase 1 and a phase 2. And then once you get funded, you receive a substantial portion of the profits of at least 80% from the account size. So crucially, the prop firm covers any trading losses, significantly reducing the individual's trader's financial risk. So you don't have to trade your personal $5,000 or $1,000. You can use the prop firm's capital. So the landscape has been improving year on year. So there are improved profit splits. When I came across them, I think maybe 2020, they're about 60-40, but progressively because of competition, they have become more and more competitive. So they have enhanced their profit sharing models, offering even more attractive opportunities to about 80-20%, where 80% goes to the trader, 20% to the prop firm. Some even have 90-10 plans where you get 90% of the profits and the prop firm keeps 10%, depending on the size of the account. So an example is maybe I buy a $100,000 account. So I take $200 of mine, put it in one of my favorite prop firms, and buy an evaluation account. I pass my phase 1 evaluation challenge. I pass my phase 2. Phase 1 is usually sometimes about 8%. My phase 2 is about 5%. I pass those 2. I go over to the live funded, where now I'm trading the live markets on my $100,000 account. This is one of the goals I'm trying to achieve, at least this year. My monthly return is about 10%. So again, 10% is the gross profit. If I have a profit split of 80-20, which is 80% to me, 20% to the prop firm. So the trader's net profit, 80% is about $8,000. The prop firm's share is 20%, which is $2,000. Now, if we can compare this to an average salary in my country, I mean, this is crazy. This is expert level, maybe salaries, people working in the UN, maybe the Red Cross, and any other big NGOs, maybe are the ones who are making some of this money. This converted to my local currency is about 1.5 million Kenya shillings, which is a lot, right? Now, this just highlights the potential to significantly exceed traditional employment income. If I can maintain this consistently over the month on month over the next couple of years, even if I was to do a 3% profit target minimum on a $100,000 account, that's about $3,000. I think about $2,500 will be coming my way, which is still quite significant. But again, before getting there, a lot of work is required. So a lot of testing and tweaking of the strategies is essential. Years of dedication and hard work to reach some of these levels, and also just focusing on daily routines, optimizing them, optimizing the workflow, optimizing the routines, optimizing the progress or the process in itself. Physical and mental health is also important, because trading is not just sitting down. I can't promise you here that you will sit down for the next 12 months and make money and make significant amounts of money month on month. The curve is not straight. The curve has its peaks and troughs. It's all about how you manage the peaks, and also, most importantly, how you manage the troughs, right? The ups and the downs are really important. So if there was a time to lock in and stay focused on a skill set that's dedicated to giving you high potential rewards, I think Forex trading is one of them, which is why I preferably chose it, because compared to any high paying jobs, that still comes with the baggage of going to the office every day, locking in your 9 to 5, comes with bosses and all other corporate politics that is involved. This one is all about just locking in, finding a good community, finding good strategies, controlling your emotions, controlling your risk, and just growing and compounding, using that compounding effect. And on a good day, you make money, and on a very good day, you make a lot of money. If you haven't subscribed, please go ahead and do so, and I'll see you in the next video.